Have you ever wondered what happens when a single sentence from a world leader sends shockwaves through the entire global economy? Well, today we're unpacking exactly that. It's a story of how politics, precious metals, and really the power of words all collided, creating this incredible domino effect that just rippled through markets everywhere.
So picture this. It's April 2nd, 2026. Precious metals are having a great run. And then, bam! Seemingly out of nowhere, the market just slams on the brakes. You can see right here that silver ETFs, which are basically funds that trade like stocks but hold silver, suddenly just plummeted by over 4%. The big question is, why? What on earth just happened?
And that's really the central mystery we're diving into. You know, a fantastic 4-day winning streak for gold and silver didn't just end. It came to a screeching, dramatic halt. It left investors totally scrambling, trying to figure out what was going on.
And look, this wasn't just one or two funds taking a little dip. The pain was felt right across the board. We're talking major players like Tata, Nippon India, ICICI Prudential. They all saw their precious metal ETFs drop in a big way. This was no glitch, folks. This was a sector-wide sell-off, and it happened fast.
And if you want to understand just how big this panic was, just look at the futures market. Gold prices plunged by over 6,000 rupees for every 10 grams. That's a drop of nearly 4% that basically wiped out days of gains in just a matter of hours. Absolutely brutal.
Okay, so we've got the what, a sudden violent market shock. Now let's get to the why. As it turns out, analysts were able to trace this entire financial tremor back to a single, very high-stakes statement.
And here it is. This is the quote that moved the markets. President Donald Trump warned that the military campaign in Iran could escalate, saying that the U.S. would hit Iran extremely hard.
Now, this wasn't just some wild guess. Market analysts drew a direct line from the president's warning to that sudden drop in precious metals. That one single threat of an escalating conflict was powerful enough to completely reset how investors were feeling.
But hang on a second. Why would the threat of war cause gold, which is supposed to be the traditional safe haven asset, to fall? This is where it gets really interesting. It brings us to the very core of this whole thing. The powerful and kind of inverse relationship between a strong US dollar and the price of gold.
So here's how that whole chain reaction played out, step by step. First, Trump's remarks created a ton of uncertainty. In response, nervous investors all over the world rushed to what they saw as the safest asset out there, the US dollar. All that demand made the dollar stronger. And since gold is priced in dollars all over the world, a stronger dollar actually puts downward pressure on gold.
So this is the really crucial point to get. In recent times, the US dollar itself has become the world's #1 safe haven asset. When global tensions start to rise, the default move for so many big investors is just to buy dollars. They see it as the most stable port in a storm.
Now, to really understand this, we need to talk for a second about something called opportunity cost. Think of it this way. Gold is a non-yielding asset. It doesn't pay you interest or dividends just for holding it. So when a strong dollar makes other things, like U.S. Treasury bonds, pay out higher returns, holding on to gold suddenly seems less attractive. The opportunity cost, the money you're missing out on by not being in those other assets, gets higher, and that pushes investors to sell their gold.
Of course, a geopolitical shockwave this big wasn't just contained to gold and silver. Oh no. The impact rippled out, and it created these interconnected but often totally opposite effects in the oil and stock markets.
And you can see these opposing forces right here. On one side, you have fears of a supply disruption from a conflict in the Middle East, which sent oil prices surging by over 6%. But on the other side, a company like Hindustan Zinc, which is a major silver producer, saw its stock fall more than 3% because, well, silver prices were tumbling.
And if we dive a little deeper into that stock market impact, Hindustan Zinc, being the country's largest silver producer, felt that pain directly. And because it's such a key part of their portfolio, its parent company, Vedanta, also saw its shares decline. It's really a perfect example of that link between what's happening in global politics and a specific company's bottom line. All right, so after tracing all of these different connections, let's just zoom out for a second. What's the big picture lesson here? What can this single, pretty chaotic day in the markets really teach us about how finance works today?
Ultimately, it all boils down to one core lesson. Geopolitical events, or even just the threat of one, create this powerful wave of uncertainty. That uncertainty drives a flight to safety. In this case, it was the US dollar. And that one single movement can trigger these rapid, dramatic price swings across markets that, at first glance, might seem totally unrelated. And that really leaves us with this one final, crucial question. In a world that is this interconnected, where a single sentence can literally move billions of dollars in seconds, it just forces you to ask, where is the next unexpected market shock?